In 1550, Spain controlled the richest silver mines in human history, unlimited treasure flowing in every month. The Netherlands? A swamp, literally. Marshland below sea level, no gold, no silver, no natural resources worth mentioning. By 1650, Amsterdam was the financial center of the world, the richest city on the planet. They didn't beat Spain with gold, they beat them with an invention, something Spain never understood, modern finance. And that invention is destroying economies right now in the exact same way it built the Dutch Empire. Let me show you how a swamp conquered the world. Here's what nobody tells you about wealth. It's not about having resources, it's about what you do with them. Spain had unlimited gold and went bankrupt 7 times. The Netherlands had nothing and became the global superpower. Why? Because the Dutch invented financial tools that turned other people's wealth into their wealth. They created the first central bank, the first stock exchange, the first modern credit system, financial instruments that didn't exist before. And those exact same tools are being used right now to redistribute global wealth. The question is whether you're on the winning side or the losing side of that transfer. So let me tell you how this actually worked. It's the early 1500s. The Netherlands is part of the Spanish Empire. They're a colony, Spanish-controlled territory, and they're poor. The land is terrible. Half of it is underwater. They have to build dikes just to keep the sea from flooding everything. No precious metals, no fertile soil, no trade routes, nothing that would make you rich in the 1500s. But the Dutch had one advantage: location. They were right at the mouth of major European rivers. The Rhine, the Meuse, ships coming from Germany, from France, from England, they all passed through Dutch waters. So the Dutch became middlemen, traders. They didn't produce much themselves, but they moved other people's goods. They built ships, really good ships, efficient, fast, cheaper to operate than anyone else's. And here's where it gets interesting. While Spain was conquering the Americas and looting gold, the Dutch were learning how to move that gold around. Spanish treasure would arrive in Seville. Spanish nobles would buy imports. Dutch merchants would handle the shipping. They'd transport goods from Amsterdam to Spain. They'd take payment in Spanish silver. Then they'd use that silver to buy more goods, finance more voyages, expand their trading network. Spain was the source of wealth, but the Netherlands was becoming the hub, the place where trade actually happened. And trade generates its own wealth. Every transaction takes a cut. Every shipment charges a fee. Every exchange makes a profit. The Dutch weren't mining silver. They were mining the flow of silver. And then in 1602, the Dutch did something revolutionary. They created the Dutch East India Company, the VOC, and they funded it in a way nobody had done before. They sold shares, public shares. Anyone could buy a piece of the company. You didn't have to be nobility. You didn't have to be wealthy. You just needed money to invest. And in return, you get a share of the profits. This was the birth of the stock market. The first real stock exchange opened in Amsterdam. People could buy and sell shares. Traders would speculate on prices. The value would go up and down based on news from Asia. It was capitalism in its purest form. And it worked brilliantly. The VOC raised massive amounts of capital, more than any single merchant or even any king could raise. They used that money to build fleets, establish trading posts across Asia, monopolize the spice trade. Within 50 years, the VOC became the most valuable company in human history. At its peak, it was worth about $8 trillion in today's money, more valuable than Apple, Google, and Microsoft combined. And all of that wealth flowed back to Amsterdam, to the shareholders, to the traders, to the financial system the Dutch had built. But here's where it gets really genius. The Dutch didn't just create the stock market, they created modern banking. In 1609, they established the Amsterdam Wissel Bank, the exchange bank. And this changed everything. Before this, banking was chaotic. Every city had different coins, different weights of silver, different levels of purity. Merchants had to constantly exchange currencies and nobody trusted the value. The Wissel Bank solved this. They created a standard unit of account, the bank guilder. You'd deposit your coins, whatever they were. The bank would assess their value, and they'd credit your account in bank guilders. Now you could make payments without physically moving coins. Just transfer bank guilders from your account to someone else's. It was the birth of modern banking, and it created something powerful: credit. The bank didn't need to keep all the deposited coins in the vault. They could lend some of it out, create money through lending. As long as everyone didn't withdraw at once, the system worked. This is fractional reserve banking, the foundation of every modern financial system. And the Dutch invented it. They could now finance trade with money that didn't technically exist yet. Credit, loans against future profits, the ability to spend money before you had it. Spain couldn't compete with this. Spain had gold, but they didn't understand finance. They'd borrow money to fight wars. Then they'd default when they couldn't pay. 7 times in 150 years. Every time they defaulted, their credit got worse. Interest rates went higher. Eventually, nobody wanted to lend to Spain anymore. Meanwhile, the Dutch always paid their debts. Always. Their credit was impeccable. So, when they needed to borrow, they got the best rates. Sometimes as low as 3%, Spain was paying 40% interest. That's not a small difference. That's the difference between economic power and economic suicide. Here's what was really happening. Spanish silver was flowing into Amsterdam. Dutch merchants were taking that silver and using it as collateral for loans. They'd borrow against the silver to finance more trade. That trade would generate profits. They'd pay back the loans with interest, and they'd keep the profit. Meanwhile, Spain was just spending the silver, buying imports, funding wars. The silver came in and went right back out. Spain was a pipeline. Amsterdam was a pump. One moved wealth through, the other multiplied it. And the Dutch invented another tool, futures contracts. This is where you agree to buy or sell something at a future date for a set price. It started with tulips, believe it or not. Dutch traders would buy tulip bulbs that hadn't even bloomed yet. They'd speculate on what the price would be in 6 months. This created the first speculative bubble, tulip mania in 1637. Prices went insane. A single tulip bulb could cost as much as a house. Then the bubble burst, prices collapsed overnight. A lot of people lost everything. But here's what's important. The financial instrument survived. Futures contracts became a standard tool. You could trade wheat futures, spice futures, any commodity. This allowed merchants to hedge risk, lock in prices, protect against market volatility. It made trade safer, more predictable. And it made Amsterdam even more central to global commerce. By 1650, if you wanted to trade anything valuable anywhere in the world, you went through Amsterdam. They had the ships, the banks, the stock exchange, the credit, the financial instruments. They'd become indispensable. And that's real power. Not the power to conquer, the power to facilitate. Now here's where this connects to today. Because the Dutch didn't just invent these tools for themselves, they exported the model. Britain copied it, created the Bank of England in 1694, the London Stock Exchange in 1801. They took the Dutch system and scaled it, built the British Empire on Dutch financial innovation. America copied it too. Wall Street is just the Amsterdam Stock Exchange, transplanted to New York. The Federal Reserve is the Whistle Bank on steroids. Every modern economy runs on the system the Dutch invented. Stock markets, central banks, credit creation, fractional reserve banking, futures contracts, derivatives. It all traces back to 1600s Amsterdam. But here's the thing. The system that made the Netherlands rich is now being used against productive economies. Let me explain. The Dutch used finance to facilitate trade. They moved goods, built ships, created value. Their financial system supported real economic activity. But modern finance has detached from production. America's financial sector is 20% of GDP. Manufacturing is only 11%. We make money from moving money, not from making things. That's the Spanish model, not the Dutch model. Spain had gold, but no production. They went bankrupt. America has dollars, but declining production. We're following Spain's path, not the Netherlands. Here's the key difference. The Dutch used finance to multiply the value of trade. Every guilder in the banking system was backed by real goods moving through Amsterdam. Modern economies use finance to create money that's backed by nothing. The Federal Reserve creates trillions of dollars, but what's backing it? Not gold, not production, just the promise that it's worth something. That's the Spanish delusion, thinking money itself is wealth. The Dutch knew better. Money is just a tool. Wealth is productive capacity, the ability to make things people want. The Netherlands built ships, traded goods, facilitated commerce. That's real economic activity. Modern finance creates derivatives, securities backed by other securities, credit default swaps, financial instruments that are just bets on other bets. There's no real production underneath most of it. And here's where the Dutch model becomes the Spanish trap. The Netherlands stayed rich as long as they kept trading, kept building ships, kept facilitating real commerce. But eventually they too fell into the financial trap. By the 1700s, Dutch merchants weren't building ships anymore. They were just lending money, living off interest payments. They'd become rentiers, passive investors. And Britain, which was still building and producing, overtook them. The same thing is happening to America right now. We invented incredible technology, built massive industries, became the productive powerhouse of the world. But now we're financializing everything, making money from money instead of making things. And China, which is building and producing, is doing what Britain did to the Netherlands. Here's the brutal lesson. Financial innovation is powerful, but it's only valuable if it supports real production. The Dutch understood this. They used finance to facilitate trade. That's why they succeeded. Spain didn't understand this. They thought having gold was enough. That's why they failed. America's forgetting this. We think having the dollar and Wall Street is enough, and we're losing productive capacity every year. Manufacturing jobs gone, supply chains offshore, dependency on foreign production growing. We're becoming Spain with better financial tools. And financial tools without production are just a more sophisticated way to go bankrupt. Here's what keeps me up at night. The Dutch financial system was designed for a world of real trade. Physical goods moving on ships. Modern finance is designed for a world of abstract transactions. Money moving electronically at the speed of light. The disconnect from reality gets bigger every day. And when the system crashes, and it will, the impact will be catastrophic. Because we've built everything on top of these financial tools. Pensions, retirement accounts, government debt, corporate debt, student loans, mortgages. It's all connected to a financial system that's increasingly detached from real production. The Dutch could survive financial crashes because they still had ships, still had trade, still had real economic activity. When modern finance crashes, what do we have? A service economy, a gig economy, an economy based on moving money around instead of making things. That's not going to survive a serious financial crisis. And the crisis is being built right now by the same tools the Dutch invented. Stock buybacks instead of capital investment. Financial engineering instead of actual engineering. Credit expansion instead of productive expansion. We're using Dutch tools to build a Spanish economy. And we know how that story ends. If you're realizing that financial innovation without productive capacity is just a fancy way to go bankrupt, then subscribe. Hit that like button. Because I'm showing you how the tools that built empires are being used to destroy them. Drop a comment. Can modern economies return to productive capitalism, or are we stuck in financialized decline? Is there a way to use these tools correctly again? Or have they become too powerful, too detached from reality? And tell me what you think, because the Netherlands invented the system that runs the world, and that system is eating itself. The question is whether we figure that out before it's too late.